Hey guys, welcome back. I'm excited to hop back into InsurTech News Roundtable with Dikla Wagner from MunichRe, who represents their kind of scouting for InsurTechs and also is a community builder in Israel. But Dikla, thanks for jumping back in with us and talking InsurTech.
Thank you for inviting me. Thank you, and nice to meet you to all your listeners. Our listeners probably don't know this, but it's very early in Israel and very late for you. So thank you for making it. And I promise it will be super interesting session, so you won't fall asleep.
Absolutely. No, we're passionate. I don't think you accidentally get into InsurTech. I think some little bug gets, in the back of your brain. You see the opportunities, you want to be helpful. But if you don't mind, what do you do? What's a little bit of your background?
Sure. So my name is Dikla Wagner, and I represent MunichRe in Israel, and I'm leading Tech Scouting. MunichRe, as probably most of our listeners know, is one of the world's leading reinsurance company with 300 billion euro of assets under management, gross premium rating of around 60 billion last year. Small startup. I'm joking. Yeah. Super small. So my role is to really bring opportunities in innovation, technology to MunichRe, to our subsidiaries, which are primary insurance company, and to our client, which are insurance company all around the world. And we are really looking in innovation in two aspects. So one, near core, what product, what services we can launch today, but we're also looking at the horizon, 5-6 years from now, how the industry will look like and what we can build today to be prepared. And here I'm talking about new revenue stream, new business model that are not necessarily insurance. They have to be related to risk because this is what we have been doing for the last 141 years, but it doesn't have to be insurance product. And it really gives us the flexibility to look at other technology, other ecosystem outside of Israel, Europe, the US, and to look at cyber, to look at Web3, to look at IoT, and so on and so on.
No, that's exciting because I don't even think of insurance as like a hard and fast thing. I look at it as like data and risk mitigation and contracts. So there's so many things you can do about, problem solving, especially as again, things like climate change. Like we can't just think about paperwork, we got to think really broadly about how we'll make the world a safe, fluid place, how we'll keep the wheels turning. So you're in Israel, which, it's funny that the United States gets a lot of credit for being big, but there's so much influence from Israel, so many great startups coming out of Israel. I really think you can look, abroad to kind of Israel, Europe, and Asia to see what's going to happen in the US. How are you seeing investments this year as opposed to last year? I know things have slowed down, but anything standing out to you so far?
So great question. And it's good to know that there is a strong connection between the Israeli and the US InsurTech. One, because most of the Israeli InsurTech target the US. So whatever happened in the US influenced tremendously on the Israeli InsurTech. Second of all, some of the leading US InsurTech are actually Israeli. So either they have Israeli founder or they have R&D centers here. So I think the connection is very strong. And this is why I think we will have a very interesting discussion. And with regard to your question, very good question. So last year, it was all-time high for the Israeli InsurTech. We raised around $1.6 billion. Just to compare it to the US InsurTech startup raised $10 billion. And we had mega round like Next Insurance to raise $250 million. Hippo went IPO in $5 billion valuation. This year is super challenging year. I think we will end the year with around $600-700 million of investment in InsurTech, not more.
Yeah, absolutely. And you're absolutely right. There's, tremendous leadership out of Israel, and there's a real close tie between the two ecosystems. And I get it. It's just such a big market cap in the US and such an open economy. And it's really nice that we have such global involvement. A big influence on my career has been helping out Fineo come to US from Canada. And I feel very privileged to help company come across the border. It's, a really cool experience. So we are entering the tech crisis right now. Do you think that it hit InsurTech head on, or do you think that there were things that happened in InsurTech ahead of time that kind of made it a little bit more stable? Just curious your thoughts on, how the tides are affecting us for our industry.
Yes. So the global high-tech sector is in crisis, but we think that InsurTech really suffered more. Even before the crisis. And you know, all the tech sector is currently dealing with a lot of challenges. The inflation in the US, here in Israel, the Bank of Israel just increased the interest rate to the highest we had in the last 20 years. So it's 3.25, and probably next year it will be even higher, 3.25%. And all the companies are really looking to move from growth to profitability. It's not only with InsurTech. By the way, it's another discussion. It's maybe a good sign for the full stack model to go in this direction, but let's touch base on it later on. So all the companies, because it's a huge discussion. So all the companies are really trying to cut costs, to extend the runway for a longer period of time. Maybe they will not be able to raise money in the next year, and we see a lot of layoffs. We see it in all the sector, but we saw it as well in InsurTech. So we saw Next Insurance, who let go 70% of the workforce. Hippo, letting go 10%. Lemonade, letting go 20%. You know what? Maybe with Lemonade, it's because of the Metromile acquisition. So I won't include it. But we see a very strong correlation between what happened in the public market and the private market. And we see it in all the sectors. And we see the influence coming to the private market after 6-12 months, but in InsurTech, we saw it immediately. And at the minute, the share price of the traded US InsurTech was cut in 80%, 90%. It affects immediately the Israel InsurTech. And in this sense, we really have to give credit to the US InsurTech, right? The one that came out of Israel, because while they succeed, raised a lot of money, had really high valuation, went to IPO, it's really helped the ecosystem here in Israel grow. So entrepreneurs were looking at this ecosystem and say, wow, you know what? If they made it big time, I want to make it as well. VC looked at the success and they say, you know what? We want to have a company of InsurTech in our portfolio. They had appetite. But the influence was also negative influence. At the minute the share price was cut, VC didn't have a lot of appetite, and still it's a discussion whether they do have appetite to this kind of technologies, and we see it influencing the InsurTech immediately. And what happened in the public market happened before the crisis. So our feel is that InsurTech may have suffered more than the rest of the sectors.
I think it's just by nature of the industry, a little bit of a conservative group. And I feel like we're going to get back to like private equity or kind of more traditional monies that are going to get into like strong fundamental companies, and the bets will sort of like lever up again. But I agree, kind of those long kind of pie in the sky dreams, you know, the slow and steadiness of insurance, you know, maybe didn't settle well. But it, you know, it happens. I've seen Hippo kind of making some really good climbs back. And I think it's just, you know, by the nature of our industry, we're looking a little bit too far almost sometimes for our own good. And so maybe we're early in the pain, and hopefully we'll get early out of the pain as well. I know there's been a few different types of InsurTechs that have came out of Israel, a few different pillars, a few different ways that we've already affected the industry. I don't know if you could elaborate on the different ways, you know, kind of helped influence the US market and evolution.
Sure. And it's super interesting. And at MunichRe, we always say we have 3 waves to look at the involvement of how the InsurTech works. And the first one is the one that all of us know and is very famous, is the full stack and MGA model. Startup that disrupt the entire value chain, right? Trying to remove customer friction, dealing with distribution. And this is the most known model, I will say. And I think that some of the players in the ecosystem might label InsurTech as full stack and MGA, but there are additional layers, right? And the second layer, we call it enabler. So startup that offer data, technology to automate one of the elements in the value chain, right? Not the entire value chain, but claim management, underwriting tool, augmented underwriting, geolocation, and so on. And really the goal with those startups is to reduce costs and to improve user experience. Last but not least is the embedded insurance and the ecosystem. Embedded insurance, as we all know, is meet your client and point of sale. We see Tesla does it. We saw GM do it with auto insurance. And we will probably have more use cases moving forward. With ecosystem, we're talking about one-stop shop. How I can sell a lot of services, a lot of product and include insurance as one pillar,
Mm.
or it's a marketplace for insurance company that's it's all about services, technology, product of insurance. But it's definitely a direction we're heading. And by the way, MunichRe just acquired an API marketplace for primary insurance company called Affinity. So also interesting to know how it reflects this pillar.
No, absolutely. And I think the embedded plays, when done right and when done like quietly can be so powerful. Like, I feel like, I hate to say it, I love our industry, but people aren't excited to buy insurance. But when it happens to be right place, right time, be part of something meaningful, be part of some sort of, on-demand, service offering, then I think it's really powerful. So I think it's just going to have to get a little nuanced. I don't think embedded, I just don't think you plop insurance down everywhere. People aren't going to run along with it. But I think the right places, it's going to make life a lot easier and definitely be a part of it. So along the lines of those pillars, I know we talked about full stacks. I know we talked about MGAs. I do feel like we're kind of hitting some new trends. And I know, before our talk, we talked about kind of different ways, kind of risk management. There's other things happening. Are you seeing any new kind of developments on how InsurTechs are affecting the ecosystem?
So definitely. And I think that the trend that we see in Israel may reflect also global trend. We see it in Europe as well, but I will talk about 3 trends we see in Israel and we can discuss it, and happy to hear you if you see it in the US as well. So the first one is really about moving from becoming an MGA to becoming an enabler. An enabler, as we said earlier, is startup that offer data technology to carrier, right, to reduce costs and so on. And what we saw is that last year, when it was big excitement about the full stack and the MGA model, a lot of startups were in this direction. On the other side, right now there is limited capacity, at least this is what we feel here in Israel, limited capacity of carrier that are willing to support this model. On the other hand, startups have to continue working and they have to touch real data, right? In order to train their algorithm, in order to survive.
I see some tech-enabled companies. One that's already out there in public, I'll mention, is SafeSite, which is a technology to help risky kind of workers' comp clients. So that's the tech. And then they have Foresight, which is the MGA. So that's an example of the technology protecting the paper. I do see other startups that are kind of leaning into the protection side right now. Like you're saying, while capacity is hard, while the markets are hard. So we're sort of doing the risk management work today. And then later they can make the more conservative monies, on the insurance, the reinsurance. So yeah, I agree. We're kind of doing I'll call it frontline management, and the upside, the back end upside's hard. It kind of was just like a hard reset on the industry, it seems like. But, this is my 9th year being licensed full-time in the industry, 6 or 7 years, 4 or 5 years being around startups. So I feel like this is my cycle, but I feel like people have seen this a couple times. People get clever ideas, they go a little bust, and then they have to kind of get conservative for a while, then they can make, clever ideas again. So yeah, it's a wild
and we will
adventure.
talk about it later on, about what you're saying, that there is more services, more solution to the end client than really selling insurance as a full stack or MGA model.
Yeah, no, I see the services to the front end client. I see the intelligence on risk management today. I feel like data hasn't been used well enough yet. We had a lot of smart forms, we had a lot of workflow ideas, but we haven't really integrated data yet. And then I feel like sometimes the data can get ahead of the curve on trying to do risk management too, and it can't quite do what it tries to do just yet, and I think we're learning that as well. I think we'll see a combination of human and machine, where the machine can kind of get set up, but we'll still use humans to kind of make sure the risk, kind of passes the sniff test a little bit, make sure it seems right. So it'll be a little bit of a hybrid, but it'll definitely be a maturing time for our industry, I think, coming up.
And this leads us to our second trend, which we see in the industry, is the move from risk transfer, passive underwriting, to taking an action and risk mitigation. And you talked about data. You mentioned data and sensors that provide us with data and help us understand the risk, quantify the risk, price the risk, but it can also help us reduce the risk and mitigate it, not always to prevent it, but to mitigate it.
Mhm.
And you know, the easy example are leakage detection, fire detection, earthquake monitoring, and other alerting. And we see it in personal line, right? We see it in PSC, we see it in health, but also in industrial IoT. How can I reduce the probability of claim? And when the losses are decreasing, the demand for services is increasing. And it's exactly what you said about we see more services. And by the way, this is also an opportunity for startups that are not part of the InsurTech ecosystem to tap in, right? If they're offering a product that can monitor, alert, mitigate risk, sensor, data, and so on, it's really the time for them to step in and build value proposition for the insurance industry. And this is, by the way, a great news for the Israeli ecosystem, because it's a small ecosystem in the end. It includes around 100 startups. And the fact we're looking at services really expand the opportunity to hundreds of Israeli startups and European startups, of course.
Well, I think you can look at like loss, but you can also look at like not going down, keeping businesses in operation, sort of, I'll say tuning for, optimal activity. You see it kind of in, home services, Armadillo is like a home warranty company out here. There's other companies around tires or keeping your car in good shape. If you kind of bring that back to the business to go more macro, yeah, I think there could be a lot to be said for optimizing a company, not just managing loss. And I could see the intelligence really helping, the upside too. No, it'll be fun. The ecosystems are getting more smart. Like I always love it's very interesting to talk about Israel, because I feel like when I talk to startups in Asia, very high on technology, very high on kind of distributed ecosystems. And when you talk in kind of the UK, it's deep, it's thoughtful. There's, it's been going on forever. It seems like there's really cool, almost like middle ground in Israel where there's a lot of tech enablement, but there's also a lot of kind of deep processes. And that's really cool to think about, the unique signature of what you're developing over there. It's really cool.
Exactly.
Yeah.
And I think that a lot of the opportunities for the Israeli InsurTech is in the places that you just mentioned. How we can bring different data sources from unique data sets, how we can leverage it to understand the risk and really take out of the box approach to how we look at risk. And this is exactly the reason we see a trend that is in Israel, but it's also global, to look at new risk. I'm talking about reality is changing. We have new technology, cyber threat, climate change, new assets, NFT, crypto. People understand that those assets has value and they want to protect it. And the insurance industry need to understand this risk and to respond, right? To launch product. And it's exactly connected to what you mentioned about the expertise of looking at the risk and developing this kind of solution. Let's take crypto and cyber, that they have a lot in common. The risk is evolving very fast. Historical data is not necessarily explaining to us what the future risk will be. Hacker become super sophisticated and the risk is continuously changing. And we really have to decide how to look at this risk and take an action. And what you said about preventive, this is super true for cyber, also by the way, for crypto. But we really need to understand how to look at this new risk and to be able to respond very fast to it. And I think out of Israel, because of the ability to gather a lot of data, I went to the intelligence force, we have a lot of graduates from the intelligence force, ability to look at a lot of unique data sets that usually in insurance, we don't look into them in order to leverage them to build technologies.
Well, I think too, like we're such a conservative industry and we play defense and risk mitigation, like you said, risk management, but I also think like optimization and using that data intelligence to make companies, cars, whatever else the best they can be, like why wait till something happens that could be prevented with, monitoring. So I think there could be a really cool proactive nature to what we're doing in our industry going forward as well. So we don't always have to be conservative old, paper pushers. I think with all this intelligence, we can also be optimizers going forward. But, it'll be fun, watching MunichRe, would you say 140-year-old startup just getting going, been around for a little while. But yeah, no, it's super fun. And, please, lean on the insurance nerds, ecosystem. If there's anybody out of Israel, I think we can help. It's such a fun thing to be a part of this global, kind of risk managing community, and, look forward to seeing what all of us being tied together can bring. And so if anybody, wants to follow you, I know you have a great following on LinkedIn, Twitter, Instagram. Where should people find you if they want to touch base about what's going on in, Europe and as far as InsurTech goes?
Yes, so like you said, we're everywhere. We're LinkedIn, we're Instagram, we have Twitter. We're super active. A lot of the role as we see ourselves is to bring knowledge. So to bring knowledge to Israel from MunichRe and to bring knowledge to MunichRe from Israel. So we love to support the ecosystem. I have a weekly newsletter that everyone are welcome to subscribe that talks about MunichRe, but also about what's going out of Israel and the trends we see globally in InsurTech. And we're super open for discussion, for idea, for collaboration. Let's just exchange, and we're here for you.
Perfect. Now, and I'll make sure to have all your contact below on YouTube. And I really appreciate you taking time today. Like you said, getting up early, me staying up a little late, making global InsurTech happen. But thank you everybody for tuning back in, and look forward to catching on the next one.
Thank you.
Absolutely.